gold proves to be a safe haven asset amid Bitcoin crash. The advantages of holding Bitcoin over gold have been publicized and debated countless times. These two digital assets, one a physical asset and the other referred to as the digital gold, have both gone head-to-head when it comes to which one is the better store of value. As the Bitcoin crash raged on last week, the discussion is once again being had about the merits of holding a relatively stable asset such as gold compared to a volatile one such as Bitcoin. Over the past week, the price of Bitcoin had declined more than 30%. This had led to a sea of red in the market as the rest of the cryptocurrencies followed suit. During this time, the year-to-date value of Bitcoin had dumped significantly. This put the digital asset, which had been outperforming its physical counterpart for quite a while, behind it once more. Despite the year-over-year returns of gold being down, it remained in the positive while that of Bitcoin has declined into the red. As of Tuesday, gold is up 0.6% year-to-date, putting it in the green territory. As for Bitcoin, the cryptocurrency is now down a whopping 55% on a year-to-date basis. The volatility of Bitcoin has been a cause for concern for those in the traditional finance market. However, it has also been one of the biggest pulls for those invested in the asset. It had grown more than 50% last year to an all-time high of $69,000 before declining over the next 6 months to a low of $17,600. While the sell-offs have rocked Bitcoin, gold has not been as unfortunate. So when it comes to the argument of which of these digital assets serves as the better inflation hedge, gold has now come ahead of the cryptocurrency. Bitcoin going down? Bitcoin's recovery streak has been encouraging over the past couple of days. After hitting a low in the $17,000 territory, the recovery has been steady ever since, save a few dips here and there. With this has come a recovery above the 5-day moving average for the first time in the last week. Despite this, the selling pressure has remained high and more sell-offs are rocking the market. However, support is beginning to form above the $18,000. There are also the implications of the price of the digital asset falling below the previous cycle high for the first time ever. It has given credence to the school of thought that the digital asset has not reached its bear market bottom. Coupled with the fact that Bitcoin has previously fallen at least 80% in all its previous markets, the bottom is likely to come in at around $13,000. Additionally, the bottom is expected to happen about 15 months after the previous halving, which puts the bottom at some time in the fourth quarter of 2022. Bitcoin is trading at $21,313 at the time of this writing. It is up 1.93% in the last 24 hours with a market cap of $405.8 billion. Why the inventor of Ethereum attacked this Bitcoin pricing model. The inventor of Ethereum, Vitalik Buterin, took aim at the controversial Bitcoin price model stock to flow, S2F. Buterin believes the model is not looking good and openly criticized it because it gives crypto investors a false sense of certainty. This creates the illusion, according to Buterin, that Bitcoin will constantly trend to the upside. As the recent price action has proven, this could lead to many people losing their initial investment and more. I know it's impolite to gloat and all that, but I think financial models that give people a false sense of certainty and predestination that number will go up are harmful and deserve all the mockery they get. Created by pseudonym analyst Plan B, as seen in the chart, this model predicted that BTC's price was going to reach $100,000 by the end of 2021. The model deviated as Bitcoin trended to the downside later that year, and many consider it a failure. Detractors, like Vitalik Buterin, believe the model fails to take other key variables into consideration and only projects BTC's price to the upside for the coming future. For example, it failed to predict what would happen to Bitcoin under the current economic conditions, with a reduction in global liquidity and a US Federal Reserve raising interest rates. In response to Buterin's comment, the inventor of the S2F model, Plan B, said, "After a crash, some people are looking for scapegoats for their failed projects or wrong investment decisions. Not only newbies but also leaders fall victim to blaming others and playing the victim. Remember those who blame others and those who stand strong after a crash. It is possible to predict the price of Bitcoin. Plan B has made changes to its S2F model and now refers to the 2019 original version and the new S2F version. As seen below, both versions predict a BTC's price trending to the upside in 2022 and the foreseeable future. If BTC stays on its current levels, around or below $20,000, in the coming months, the analysts said the S2F model will be less useful. The other scenario is that BTC is extremely undervalued and will bounce back soon,